What's going on, everybody, and welcome to another weekly update. And in this video, I'm going to provide you a state of the market and stock picks events for the upcoming week. That sounds like something you're interested in. Consider subscribing, as I do provide daily and weekly updates to get you prepared for the day in the week ahead. So let's get straight into state of the market. Currently, right now, the situation is quite interesting. As you can see, like technical wise, we've been holding this level very well and very tight. Let me go ahead and pull this up real quick for you guys. Upcoming events this week has been it's pretty uneventful. There's still other things that are going on currently that we've been seeing. Um, Friday, as far as inflation is concerned, we got core CPI. Again, not really sure how much weight this is going to hold. A lot of the data, in my opinion, really doesn't matter at this point. Really, what matters is this right here is the Fed that we got next week. That's what matters. And in my opinion, again, 50-point basis move or lower or higher would essentially be bearish, in my opinion. We would, if it was 75 points, we'd correct back to the low end of where we've hit. If it's 100 points, I think the general market index would correct 5% from the current low of this year. So, being said, there's been a lot of other information out too this week. There was information about potential Putin had cancer. I don't know how true, or is battling cancer. I don't know how true that is. That did spike the market on Friday. Again, everything aside, don't ever wish harm on other people, but this is a stock market. You have to understand the way it works, and it works very differently from what your average thought process is. So, being said, Putin could potentially have cancer, so that spiked the market because it could obviously pertain to end of war, which is something I have marked here. If that does happen, that could be a very bullish catalyst. It would relieve supply chains. Then you also have China, something I mention all the time. If they decide to invade Taiwan, the market could come down fairly quickly. In my opinion, I think the general index could come down potentially at 80 points from where it's currently at if China decides to come into the war. Again, also because they control a lot of supply, and there's a lot of major companies that are moving outside of China. If that does happen, so yeah, that's something to keep in mind. You have Apple looking at other places. You have Tesla looking at other places outside of China. So that could kind of be of a forewarning of what could potentially happen. You're also looking at another big news event that happened this week is Tesla is cutting back on hiring, which is a big red flag. Are they stopping a lot of the semis? Have a lot of semis been canceled? You've seen this in Amazon's cutting back on people. Microsoft actually downgraded their forecast tremendously and had a big hit this week. They bounced right back though on the same day. And so watch list this week is going to be short. I think watch list, if you don't follow me at Hemi, at Hemi137 Twitter, I do morning calls on there and kind of get you prepared what's going on for the day. And then I do nightly videos like this, going over the day and what I'm looking at the next day. But nonetheless, it's very short. General index, Tesla and Amazon are kind of what I'm looking at this week. Amazon has a big point percentage here. The SPX has a bigger point percentage as it did last week as well. And these numbers are generated off of options. Again, options, they try to predict with current events how big of a move the market's going to have. And so, again, this is always good to kind of watch these numbers, and you can kind of get a feel of how the market is looking, if it's going to introduce volatility. And again, if you're not into options, it's not something for everybody. I can guarantee you that. But one thing is it's good to at least look at these numbers and see what the volatility is going to be. A lot of times, if you're aware of events, sometimes you can catch these off guards, and that's where some big percentage gains or And that's why I typically play options because of that fact. If you can find the gaps between the events and what they're predicting and how much weight that event holds over what they're predicting, can sometimes get you some massive gains. But again, it's not for everybody, and don't FOMO into options because of that. This game is this year's definitely taught a lot of people you don't want to be FOMOing into anything and hold on to what you currently have, and be very precise in this game, in the market that we're in right now. So, with that being said, the whole Elon thing kind of shook the market. Again, we essentially spent all of May down below the 20 EMA and we popped back. We really need to get out of this area. And one thing I've talked about price action. When I talk about price action, is the strength of the candles and the fact that it doesn't want to bend below this, but also doesn't want to go above this. Definitely don't want to see this continue to sit here for another 2 weeks trying to debate what the Fed is doing. The market very well could do that. Just be mindful of that. It could play this range essentially from this 4181 down to the 4082. So it could bounce back and forth until we get an actual action. That's why I said the CPI, the core CPI, I don't think is really going to matter. What at this point is going to matter is action taken from the Fed. When the Fed starts actually taking action, then they will go with that. If they again hit 50 points basis or lower, I think this could potentially start running, pushing back up. It's not going. I don't think it's going to run. I think a lot of the negative news that's coming out, again, like I talked about Microsoft, talked about Tesla, that's some big news. And Tesla did sell off a lot, but it held and started bouncing back somewhat towards the day. Again, we're gonna have to see how we open Monday. You're gonna have institution. You're gonna have full volume this week, and because you got a full week, you're gonna see if the market likes where it's currently sitting at or does not. And again, something I've started talking about when I'm talking about 50-point basis moves and how the market's kind of generally been moving. When we came into this year, obviously we corrected because we knew it was coming. And again, all this stuff is easy to point out after the fact. So when we came in at a 25-point basis move, as you can see here, this is essentially kind of gauged. I think it was more so over here. It was a 25-point basis move. And we came in at 25-point basis move. The market rocketed. And then we started talking about 50-point basis moves. So we corrected down to here. So anytime I'm talking about this, if the market talks, if the action from the Fed is a 50-point basis move, I think we're floating around the 4189 mark. If we talk about 25-point basis move, I think the market will float around the 4385 mark. 75-point basis move, you're looking around that 3910 mark. And then again, if we look at 100-point basis move, you're still looking at actually the 75 is probably more so around here, the 3855, and then you take that from there. Another 5% correction would leave you around the 3670 mark, roughly, is what I'm saying. So this is the general index, and considering as much, tech and everything else has taken such a beating, that the only meat left on the bone would be tech to almost get more demolished than it already is to bring us down to that level. But understand that if the rate hikes get to 100-point basis moves, that it's going to sink us down to this level if that 100-point basis move is. And one thing to keep in mind, every time you see these meetings, right after these meetings, if it comes at par of what the market's expecting, like down here, they were talking about 75-point basis moves, and then they came out with a 50, and this thing shot straight up. It happened here. There was news about 75 points, and then we got the news that, hey, no, it's a 50-point basis move, so we popped, and then more Fed members coming out. No, we're hawkish, and so it sold back off to that 75-point basis move, which is down here, and then again, when the actual action was taken, 50-point basis move, we popped straight up within a matter of days. So now we're sitting here. What a 50 basis move is. Now this is not every. This is every individual 50-point basis move, right? I'm not essentially appending every rate raise onto this. It's just currently where it's sitting. in my mind. So every action taken, it's 50 point, we sit here. If it's 75 point, we sit here. If it's 25 point, we're sitting up here. So one thing to be mindful is this: you have to realize there's always a pattern in the market. It's never the same. You have to decipher it, and to be able to decipher it, you have to have some time. And so you have to be patient in the market. And I know a lot of people, they want things now. This is not the market to get things now. People FOMO into stuff. You don't want to be FOMOing in. You have to be very stealthy and very patient in a market. And it doesn't matter what market it is. And people, I think, essentially got spoiled with the past 2 years, and then you just buy the dip and it goes up. It's very rare that it happens. You normally have cycles like this. It's not as volatile as this, but you normally have cycles where earnings, you get some pushing, and then the cycle off, and then you get some pushing to the next earnings. So it's pretty clear cut when you watch the earnings cycles. But aside from that, again, this has all been Fed judgment on rates, and so you're seeing where these levels are and where they hold. This is why I like supply and demand. 50-point basis move, you're watching it here. Again, 25-point basis move, you're watching it here, and then 75 point is sitting down here. Again, 100 will be sitting right here on support. So we're kind of seeing how we're doing. Is this going to be a higher low? Is going to be important. If we do break this, a lot of stuff is breaking. People are saying crash. Don't think crash. We've already corrected quite a bit from the beginning of the year. And if we look at the beginning of the year to the lowest points of the year, it's been about a 21 point percentage correction for the year. So kind of roughly around where you're going to reverse. Again, if we start threatening 100-point basis moves, we could very well come and revisit this. Aside from that, I think any no new news is going to be good news at this point. Again, the world is a crappy place, and it could get worse. As long as it doesn't affect supply, as long as it doesn't affect earnings, we should be good. But if it is affecting, like we're starting to see, you're going to get a lot more chop until the market figures out, okay, well, at what point have we hit max inflation? Is it going to actually start coming down? If we start seeing numbers that show that, if the market, again, if the Fed start coming out and said, hey, things are looking good, and we're going to start dialing back on rate raises, this thing is going to explode. And right now, you have to realize that the tapering of the bonds, purchasing assets is starting to roll off this month. And that's going to help. The Fed is slowly taking the training wheels off the market. You have to understand the buy the dip theory that you had the past 2 years was fully backed by the Fed. So it didn't matter. You had growth running ridiculous numbers. You had everything running ridiculous numbers because of that. Now this is the correction period to where you get back to regular growth where it's not backed by the Fed. And so that's why you're getting this volatility, these massive, strange drops because of that. But just be mindful, the market can still push up. It's by design, it can still push up. And so that where we're currently sitting at, I think is still a good spot. And again, I don't see a 75-point, 100-point basis move. I still believe the Fed is overcompensating right now, that things will stabilize and that we will start moving up. It's just being patient and letting that play out for the most part. So that's what I got about the general index. We'll go ahead and look at Bitcoin. Bitcoin is still holding very well. There's been a lot of news about the different chains and stuff. And not creating blocks. It started with Luna, and then you're getting some updates in Ethereum. So people are worried about that. Solana keeps going down. So you got some people being fearful about the different chains because they don't quite understand the technology. But I like the fact we were basing here. I did like the fact we were basing on the 30. Now we're kind of broken below that. We're holding. Could we keep selling? We sure can. Like I said, anything can keep selling. Again, you have to be very mindful. Things can change. If you think things are black and white in the market, you are in the wrong place. This is not the place to think that things are black and white. They are not. They change every minute of every day. And so you have to come in with that mindset. If you can't handle that mindset, if you're over emotional, it's best to just dollar cost average and hold for 5 to 10 years on good companies. Otherwise, trying to play swings or anything like that, any kind of day trading is not for you, and it isn't for everybody. And so that's something you need to be aware of. So Bitcoin, again, I like where it's currently at. Again, everything is slowly changing over to crypto, so you have to be mindful of that. One thing I do like is that is like stabilizing. When stuff starts stabilizing, you get more moves like this. You don't get these parabolic moves. I think a lot of people like to assume that you're going to have these massive rips and stuff like this. With crypto, it's not going to always be that way. Once there starts getting regulation and stuff like that in this kind of market, your Bitcoin isn't going to move as much, right? There's going to be specific events where you'll have stuff like that. But majority of the time, you're going to get moves like this that aren't as exciting. And again, crypto is still new, so there will be points where it runs. There'll be points when it chops like this. So just be mindful of that moving forward. So again, Tesla is a big one I'm watching this week. This is something I talked about during this week as this trend line for Tesla. If it does break, it didn't break this and it got rejected. Again, this was all aside from that news, something I talked about, like you think you're going to get that breakout and then perfectly you get timed event, some random event comes out with the Tesla stuff and it just sells off. So the key is do we make a lower high here and just hit 657 and then reattempt to try to break it? You'll get some sort of pullback. This could even be enough pullback at the 700. Again, any kind of round number is a psychological number. And normally the people will, if you notice, anytime you buy, the average person buys or sells anything in the stock market or in crypto, people go for round numbers. And so when you're looking at major supports, this is a hot tip here. You want to sell before those round numbers because you get hard rejection off of hard numbers, especially if you get parabolic moves like this, you'll get a really hard rejection off of it. So we could bounce here to reattempt, try to break it, and then or continue to sell. Again, I don't like the news with Tesla. We have to see how tech is doing. Tech started helping this transition up. But we do again have to be very careful on what's going on here. Again, we could revisit the 660 mark for a lower high and then reattempt to try to break it and hopefully break it at that point. That would kind of, I think that makes more sense in my opinion to hit this level and then reattempt, and that should lead us into the Fed meeting. So you got a couple days, I think, for us to make it down here, then push up, retest, and then try to break out. So that's kind of what I'm looking for this week on Tesla. Google, it's not a huge one for me this week. Amazon's got a big move coming this week, so kind of really watching that 23.35 mark. If we can hit that or retest that and hold, I think that would be good in my opinion. Kind of like Tesla, get that little bit of a pullback, then push back and reattest this 25.10. Again, this first attempt on the month, the 50 monthly, you're going to get rejected. That's an obvious, something I talk about all the time. You're looking for that lower high. If we can establish a lower high, I think would be a very positive thing. Retest could potentially break it, and then it could potentially run from that point. And then one more thing I do want to go over is looking at the banks. Again, the banks are we had that breakout, and then the last thing I want to look at is the banks here. The banks are breaking out, so we want to see if we continue to run here. I think. Let me load my studies here. Yeah, see, I like the fact that JPM's been strength here, but we don't want this to break the 120.29 mark here. Could potentially run up. We're not going to exactly touch that 200. We could come close to around the 141 mark. But the bad thing is so many of these other banks aren't looking so hot. We did have that breakout, and like I said, that we're getting these like false breakouts, and then when they start breaking down fast, and we're seeing that here. This Goldman Sachs needs to hold the 316 mark. If it does break that, could be heading to lows. And if banks start hitting lows, that's going to be essentially your indicator. Tech, again, your weakness in Tesla now is not good. You're starting to see a massive weakness in In tech, it could be a very bloody week back down to lows, at least the first half of the week. So just be mindful of that, and then could potentially have a bit of a rally towards the end of the week to try to keep that range going. Again, I think we're very range bound in a lot of things that we do. But if you watch the banks, see how they open in the morning, that's going to kind of give you guidance on where the market will go in general. If it starts selling heavily, you might get a push half the day from tech. And then at some point, tech will die, and the rest of the market will start pulling back. And if that rotation of financials and value doesn't start pushing up at that point, it's just going to continue to start flushing. So that's pretty much what I got. I think, again, this morning or this week, what's really important to watch is just really just watching to see the range that we have this week, watching to see where we land. It's something I keep talking about, reiterating. Where we land is going to be very important, especially with the banks. If you can get a grasp on where the banks are going, then you can start looking at value. I normally use BA for a good value to see where the value plays are at, and then watch your Teslas. You have to watch your rotations with tech, because sometimes it's in Apple, sometimes it's in Tesla or Facebook or Google, Amazon. Watch those big techs and see where, if they have strength or not. If they do not, as long as one of them is pushing hard, that's what matters, because then it can pull the rest of them up. If they're not, then if you see total weakness across the board, you can guarantee that it's going to sell off some. And we've been selling and kind of chopping, so we want to see again where we land, and we could chop all the way until the Fed meeting. So just be mindful of that as well. So nonetheless, that's pretty much what I got. If you've made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.